Hey guys, good morning. It's Tony. Before I start the video, I do want to say please like, subscribe, and comment if you're watching this on TikTok, YouTube, wherever, all that good stuff. If you want to join the Patreon, all the links are in my bio, or you can join directly at www.patreon.com/but I'm not a trader. I wanted to get into a question that somebody from TikTok asked. His name is John, and he was like, "Hey man, like, I've been thinking about joining your AI sports betting Patreon." He's like, "But I saw that you also have a stocks Patreon." He's like, and he's wanted to know how easy it was to actually, if it was beginner friendly, right? So obviously, there's like when you join, right? There's a lot of things that you can understand and that you can learn, right? My personal preference, right? I would rather enjoy trading futures and options on more of a swing basis. And by that, I mean that I would run, let's say, a trade, right? Maybe, for like a week out or a month out or a couple months out, right? I enjoy swing trading a lot. I also do options and I run options all the time. And I'm also a funded futures trader, right? I have $150,000 account. I grew that to, like, I think right now it sits at like 220K or something, but I'm not going to talk about that, right? Specifically, if you're focused on long term, I don't think there's anything easier than my custom system, right? I really don't think so. And the reason why I say that is because, I'm going to go through a couple of charts, right? I'm going to show you guys. I'm going to start with Bitcoin because it's popular right now. So I'm going to show you guys exactly where you guys would have purchased. I would consider a perfect entry, right? When you see a green bubble, right? And you see this line up here. When you see that line under this like dash line on the bottom side, right? So you know how you see this line right here, like kind of in this dark area, right? That whole dark area means that a stock is essentially too low, right? And in other words, it's just too low. It needs to have some sort of recovery, right? On the monthly chart, right, you would have purchased Bitcoin 2 times in the last like 5 years, right? And both times, your first entry, right, would have been here at $4,000 on Bitcoin. And this would have been in March 2019. Prior to that, I don't think my Bitcoin chart goes to, I'm using Coinbase, so I don't think the chart gives me a little bit more historical data. But again, really, this is the easiest thing that I can think of. You would have bought twice. You would have bought once in March 2019 at $4,000, $4,094.99, right? And then you would have bought again right here. You would have bought again one more time in October 22nd, right? At $20,489, right? If you would have listened, right? Again, this is long term. You would have been holding Bitcoin for the last, right? For this one, you would have been holding Bitcoin for 2 years now. And for the first entry, you'd have been holding Bitcoin for about 4 years or so, right? So if you bought the first time at like $4,000, right? Let's do that. $4,000. As of right now, you would be up, right? In 4 years, you would be up 23 times. If you put $1,000 into Bitcoin, when my indicators told you, you'd be up 2,300%, 23x. You would turn $1,000 into 23,000, right? The second time that I told you was right here, at the close, right? Right there, right? If you would have bought, so let's actually get rid of this one, right? You know exactly how much you guys would have made. Now let's do this, right? If you would have bought right here at the close, exactly when that green bubble happened, right? You would have been up 395%, basically 4 times, right? You would have been up 4,400%, right? Essentially a 4x. If you would have put $1,000 in 2 years, you would have had $4,000, roughly $5,000 around there right now, right? If you bought that. Let's go with another popular coin. Let's go with Doggy, right? Doggy. Again, same thing. Actually, let's use a cleaner chart. Doggy, we'll use Binance. Cleaner chart on Doggy, right? You would have purchased twice, right, in the last couple of years. Let me see. There we go. Get rid of this, get rid of that. Here we go. The first time that you would have bought Doggy would be right here. You would have purchased Doggy at the close at 6 cents. You would have currently been up, right, 657%, or roughly a 6.5x, right? Let's do it again for the second time that it gave you a buy, right? Told you should probably buy. Actually, it was actually right here. Told you to buy here again at 6 cents. You would have been up again another, right, 586%, right? You would have been up the first time like 600%, like a 6x. Second time like a 5.8x, right? You put $1,000 in it, right? Each time that would have been $2,000. $2,000 times 6, you would have been up to $12,000 right now on Doggy. right? Let's go with your other regular entries. Let's go with SPY, which is the most popular stock in the entirety of, the world, right? The S&P 500, right? Usually, right, what everybody says is the SPY gives you a rough return of 7 to 10% per year, right? But if you would have listened to my indicators on the monthly, right, you'd have bought right here, right? As soon as that monthly closed, right, you would have been up on the SPY, right, since you purchased this back in November 22nd, right? That was 2 years ago, right? You would have been up 50%, right, in 2 years versus being up 7% a year and 7% a year. You're beating the S&P 500, right, by 7% per year. You're now doing it. This is in 2 years you're up 50%, right? You're beating it by like 5x, right? Let's go with Nvidia. Again, Nvidia. If you would have bought Nvidia, right, when the trigger happened, right, you would have bought back in again, November 22nd. You would have bought here. You would have been up 751% on Nvidia. Let's go with Tesla. Right? Let's go with Tesla right here. Let's get rid of all of this stuff. There's other things that I have right there for trading, but again, you would have purchased right here, right, at 198. You would have currently been up, right? Keep in mind, this was this year. This was just in June, right? You would have purchased this in June. You would have already been up 77%, right? The last time was February 2023, right? Holding long term, you would have been up right now, again, roughly that same amount, 71%. So each entry, you would have bought the low area, right? You would have bought that low range. You would have been up 77% if you bought in June. In the last, 1, 2, 3, 4, 5. In the last 5 months, you would have been up 77%, beating the S&P by 10x, 1,000%, right? Or, let's go with the random stock. I don't know. Amazon, right? Same thing, Amazon, right? Again, you're buying when that green trigger happens, right? Right around here. So your first entry would have actually been here at 134, right? You would have been up 45% from where we are now. Your second entry would have been right here at $100. You would have been up 100% from when you purchased. So either way, in a year, right? Again, S&P goes 7-10% maybe at the highest. You just made 92% return in 394 days. So, this is more of an explanation video to tell you guys exactly how well it performs, especially if you're doing things longer term. It's extremely easy. It's extremely easy to get 100%, 300%, 500%, 700% returns within a year or two using my indicators. And again, this is just, you're not doing anything, right? You're listening to my indicators. You go to the monthly chart and you say, oh, hey, there's a green bubble. The stochastic is at lows. This line right here is at lows. Green bubble, cool. Let me go ahead and add to my long term, right? And guess what? Now, instead of adding every single week, right, you're adding exactly where you should every single time. And guess what? In 365 days from now, that $1,000 could probably be like 10 grand. I'll see you guys later. Bye-bye.